Welcome to WTF, West Bank Talks Finance, the podcast that turns WTF moments into knowledge that you can use to make informed financial decisions. Subscribe to get notifications when we release new episodes. Hi, my name is Lebogang Khawaketse and I'm the head of marketing for West Bank. Today we're talking types of car finance and I've got two very important guests with me on studio. Thembinkosi Phansi, who is the MD and founder of TED Cars. Welcome, Thembinkosi.
Thanks, Lebza.
All good. And then I've got Kavish Deda, who is the business head for Liquid Vehicle Finance, one of our joint ventures at West Bank. Welcome, Kavish.
Thanks, Lebo.
Oh, good. Yeah. So types of car finance, gents. And maybe I'll start with you. Let's start with you, Thembinkosi. What is installment sale finance? If you have to break it down, if you have to tell your grandmother, as I always say.
Yeah.
How would you break down installment car finance?
Yeah, installment sale is basically a finance on a vehicle over a period of time. It can be 60 months, it can be 72 months, depending, of course, on the customer needs and what the customer qualifies for in terms of the interest rate, budget-wise, what sort of a payment per month they want to put. And that's the installment sale.
Okay, and then, you spoke about payment per month.
Yeah.
Is it the same every month? Does it vary?
So if, for instance, you've got what we call a linked interest rate,
okay,
meaning that your interest rate on that particular installment is going to fluctuate with the repo rate. And also then you've got a fixed interest rate, whereby you fix the interest rate for that period of the finance. If, for instance, a 60 months installment sale, and then your installment is locked for that period at an unchanged amount.
Yeah, just to add to the point on the installment sale, I think it's important for consumers to understand that generally when they purchase a new vehicle, it will come with a service or maintenance plan, generally for a period of 3 to 5 years. Post that, they will be responsible for 100% cost of the maintenance of that vehicle.
So, for example, if the service plan covers, let's say, 36 months, but I have the vehicle for 60 months, does that then mean for the balance of the 24 months, I would be liable for any service and maintenance and
correct,
all the related things?
Because once that policy expires, you would need to then pay in to get your services and so on.
Kavish, I'm going to ask about lease, the lease type of car finance. How does that work more so differently to the installment sale?
You don't own the vehicle. Typically with the installment sale, at the end of the term or your last payment to the bank,
okay,
you would become the legal owner of the vehicle. With the lease, it's pay for a usage set term generally, and at the end of the term, the vehicle is given back.
So terms and conditions apply?
Correct.
Okay. Great. So in as far as a lease is concerned, how different is the acquisition process for a customer? And by acquisition, I say the things that we look at or the things that you would look at when a customer wants to take out a lease agreement.
So level is not that much different. You still need to look at affordability. Can the customer afford to pay the installment for the lease as well as when you do with the installment sale?
In the introduction, you mentioned that there are terms and conditions when you take out a lease. And I think Thembinkosi alluded to that earlier. Do you maybe want to take us through these terms and conditions?
Sure. One of the things that we look at when customers come to us for leases, we need to understand what is the mileage that they will be traveling. Essentially, that's what's used to manage the asset. Generally, logistic companies would require a certain mileage parameter per year per vehicle, and that's what we use to manage the asset. Second to that, you can either have a managed maintenance option or what we call an operating lease option. Okay. With the managed maintenance, it's an all-in-one charge that you would pay as the customer, and the bank would take care of looking after the vehicle, making sure that it's serviced on time, tires are changed, etc. Versus the other option, you would just lease the vehicle but would be responsible for the maintenance and the day-to-day running costs.
Okay.
If I can chip in, is the use of a vehicle also important in terms of ascertaining if you should go for a lease or you should go for an installment sale? Because it's a lease, but what are you going to use the vehicle for?
Is it safe to assume that part of the terms and conditions, if the bank maintains it, if the bank services it, is how you use it, how many kilometers or mileage, they stipulate those terms and conditions if they're maintaining it. Is that a safe assumption?
Correct. The T's and C's are explained explicitly to the customer and as well as included in the contract. So they well articulated and explained to the customer when they're taking on the lease product.
Okay, great. So customers need to be mindful of the terms and conditions, which are very important.
Yeah.
Yes.
Okay.
Yeah.
Then, a third type of finance that I just want us to maybe touch on, and Kavish, I'm going to pose this one to you.
Mm-hmm.
This guaranteed future value, and I just really want us to talk about that. What is a guaranteed future value type of finance?
A guaranteed future value, or GFV as it's called, is essentially the OEM or the manufacturer offering you a guaranteed purchase price at the end of the term of the product. So, for example, typically GFVs can take 36 or 48 months, and the OEM or manufacturer would guarantee you at the end of that term, they guarantee the value of the vehicle to be 50 to 60%. What that does for you is takes out the angst of having a residual or balloon payment, whereby the customer is responsible for making that payment. Again, there are some T's and C's which need to be followed, like regular servicing and keeping the vehicle in good condition.
And I was going to say, I'm sure I can't be a drag racer for that type of finance. Okay, no, these terms and conditions are quite important. And again, I would assume that they're highlighted quite black and white for customers to be mindful of. But what I want to ask, and Tembikosi, maybe you can help with this one, is why would I, again, take out a guaranteed future value versus a lease versus an installment sale? A lease and a guaranteed future value, they sound more or less the same. What is the difference?
Yeah. I think all right, firstly, the guaranteed future value, you are guaranteed, as my colleague have mentioned here, that your car is worth this much in the future. And at that, let's say if you take, for instance, the 48 months, at the end of 48 months, this particular vehicle is going, with the mileage that was, remember, you must also select how much mileage are you going to do per year, right? So if you're saying I'm going to do 25,000 Ks a year, you know that in 3 years' time, that is like 75,000 kilometers on this car, right?
Okay.
I won't go over that mileage. So then the manufacturer, they guarantee you that, okay, this car is going to be worth this much. At the end of that term, you've got options. Right? Unlike the lease, term finish, bring back the vehicle. Right? On the guaranteed future value, you've got options. An option to say, okay, I still want to continue with this car. And then, of course, you continue. Or I want to buy this car. Right? Meaning that you can either now, instead of that guaranteed future value, go to a different finance option to finance the value of that car at that time for, let's say, another 3 years or 4 years or 5 years.
And you could assumedly get into an installment sale for that portion.
100%.
Interesting.
Right? Or you can say at the end of that term, all right, no, I want now to upgrade to another vehicle. Right? So then the dealer or the manufacturer will take that vehicle, or the finance house will take that vehicle, and then you enter into a new guaranteed future value, right? Or a new installment agreement. So there's options at the end of the term. Whilst with the lease, it's a matter of, okay, 60 months is up, you need to return the vehicle. Okay, of course, even there you can still choose if you want to go for another lease or not.
Sure.
But with the guaranteed future value, you know exactly, you've got options. You kind of like need to work it out. What do I need to do here? Do I buy this car outright? Maybe I've saved some money. This car now, when I bought it, it was 800,000. Guaranteed future value, as an example, is 350. At the end of the term, maybe I've got this 350,000. Let me buy this car cash and keep it because I still love it.
Okay.
Are you with me?
Great.
Or, hey, let me return it. I need a new model of this particular car.
So there's options at the end of the guaranteed future value.
Yes.
And I mean, customers love options. Kavish, you want to add to that?
Yes, if I can add, I think traditionally the GFE product has been exclusively to certain German variants in the market.
Okay.
But what Westpac has done over the last 2 years specifically is introduce a GFE product with a lot of our alliance partners.
Okay.
So basically what that means for the consumer, you could get the GFE product on a different variant other than typically the German brands.
I like that. So are we then saying that a GFV product creates excess points for the customer to afford, cars that they would not inherently want, but then also any other car in this instance of this product?
Correct, Lebo. I think it gives affordability as well as the options, as articulated earlier. You know, we want to give customers more options to own vehicles or walk away for vehicle or take a
Yes.
new GFE, as mentioned.
Yes, yes.
Interesting.
And I think that's key. What my colleague is mentioning that, because most of the time people think that there's only one way of having mobility when it comes to vehicle finance, but there's other options as well, as we have been sharing here today.
We've talked about 3 different, types of agreements. I just want us maybe to take a few steps back, and think and maybe plan out the scenario in terms of what type of a customer typically goes for a specific installment sale agreement. So why would I go for an installment sale? Why would I go for a guaranteed future value? Or why would I go for a lease? I think that helps, sort of solidify these differences. So in your views, or, as per industry experts that you are, what type of a customer, Tembinkosi, would go for an installment sale agreement?
So yeah, any customer can go for an installment agreement. Anyone who is credit worthy or who can qualify for credit can get into an installment agreement. And then, of course, on the lease side of things, I think for a lease is for someone who's running a company.
Okay.
That will work best.
I mean,
right?
Kavish spoke about logistics.
100%. So if you are in corporate and you're running a business, lease might be an option, because remember now, the risk of that asset, when I say risk, I mean like it doesn't sit in your books, right?
Okay.
Of course, the payment that you have to make, it sits in your books, but in terms of the asset itself, you're not sitting with capital intense sort of situation whereby you just added assets to the business, and it makes the business not that liquid. So in lease works better when you are in business or corporate or sales, or your company's got the reps and all of that. Then look into that. But if you want the ownership of the vehicle, that's an installment sale, as my colleague have mentioned. At the end of the term, you've paid your last installment, now you've got this car, you've got the ownership of it, you've got the papers for it. Guaranteed future value, and you've got options there.
Okay.
All right. So you are open. So at any given time, you can decide what you want to do moving forward.
Thank you. And Kavish, I just want to ask, I mean, these terms and conditions, maybe let's just double click on those. What are the key things, that customers need to look out for when taking out a lease, for instance, because you spoke about terms and conditions there, or even a guaranteed future value where you get the option to take the car back? What are the kinds of things generically that can nullify this type of agreement?
I think the first thing that's very important is the mileage or the kilometers per year parameter. Generally, you set that up front with the bank, and if you exceed that, there are penalties which will be applicable. So very important to understand how many kilometers you can travel per year. Second to that, to make sure that the vehicle is serviced regularly as per the manufacturer. Very important to keep it in good condition. And generally, be upfront if things go awry, or if you are in a accident, make sure that you speak to your insurer. It is approved and sorted out by an approved repairer, or just to make sure that the vehicle is as per the manufacturer intended it to be.
I mean, can I make my car look cool? Can I add tires? Can I add sound? Can I drop it? I have it for a while.
So funny you say that, Levo. I was actually going to get to that. I think that's also quite a big distinction. We know South Africans are passionate about their cars and love to modify them, as you say. Generally, then I think the installment sale product would be the product I would choose if I wanted to go that route. But if you would like to just use a vehicle for mobility solution, get to point A to point B, work, etc., then you would go into the GFE or typically a lease, because you'd want to drive the latest car every 2 to 3 years, and you're definitely not modifying your car. I really don't think any manufacturer would allow you to do certain of those things. So that's why I would choose a GFE or a lease versus the installment sale.
Yeah.
Okay.
Yeah.
Scenario. So I'm a fish and chips owner. You've got a couple of shops, let's say 2 or 3 shops. You need a couple of vehicles. What kind of agreement would be suited for that scenario?
Yeah,
Because-
I think it can be a blank approach to say, no, you're going to be suited with this particular scenario. You don't want to say, okay, no, let me go for installment sale simply because, no, I just want to have the ownership of the car. And then you pay, as an example, you pay 15,000 Rand a month. Whilst you've got other options for a lease whereby you're going to pay 12,000 a month or 9,000 a month. What do you need this car for?
Okay.
Right? If this car you need it for the business, meaning that you want someone to move around the shops and everything else, again, I'll always say, then this is corporate. This is for business. This mobility is needed for the business. So a lease will work better there, as an example. But now if you say, no, we just want to have a car so that we can be able to do stuff. Okay, and then you might as well look for an installment sale because it looks like you want to keep this car forever, basically. All right, because I'm sure your business will run for quite a long time. You can't be in business for a short period of time. So there's there's so many factors that goes into why. So this is what I always ask customers: what are you going to use this car for? How long am I going to keep this car? What sort of a mileage I will do annually? Then you can start to look at these different options in terms of financing this vehicle.
Really, really insightful conversation, gents. And I just want to, as part of wrapping up, ask you one question, Kavish. What is the one key takeout? What is the one thing? You are in a lift with a customer who's considering buying a car, regardless of the options. What is that one piece of advice that you would offer this customer in those 2 minutes that you're in the lift with them?
Don't be afraid to ask the questions.
Don't be afraid to ask questions. And yourself, Tempinkosi, same scenario?
I'll add to say, just dive deep into the terms and conditions.
Terms and conditions.
Yeah.
Don't
Don't be afraid to ask questions, and also dive deep into those terms and conditions.
Wow, great. No, thank you, gentlemen. So there you have it. If you are considering buying a car, there's 3 types of options. There's an installment sale agreement, there's a lease, there's a guaranteed future value. Ask the right questions, understand the terms and conditions, but most importantly, know what you are using that car for. Right? And of course, we are available as financiers, as people in the industry to answer those questions.
Yeah.
It's been a very insightful conversation.
Awesome.
And yeah, thank you. Thank you for coming through.
Thanks,
Thank you for spending time with us. We appreciate it.
Thank you.
Thank you.
Thanks for listening. We hope that you found that useful. Now go and subscribe to be notified when our next informative episode is available.